Ryan.
Good Friday afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We got 53 minutes left to go in the market week, and we have markets right near the highs of the week right now. You got the S&Ps up by 47 points. We're up by 0.8% at 64.13, folks. Yeah, less than 1% from the highs. You see it on a daily basis, 64.68, and on a 15-minute basis, just under the highs of early yesterday, right? We reach a high right now, as in the last hour, of about 64.19. You got highs early yesterday of 64.26, but we are sitting right at the open yesterday and a little bit of a tedious area. You saw quite a meltdown in the indices yesterday, but not today, man. S&P's higher. NASDAQ 100, how about 0.9% higher right now? Up 211 points, 23,708. You get the Dow up about 0.5%, 210 points, 44,291 in the Russell, in the positive by about 0.2% as well, trading at 2227. Bitcoin down $1,000 at 117,000. Ethereum having a moment, and it's continuing. When I was on the morning program, I was talking about this morning. Started the program at 9 o'clock. Said 3,900. No, we got 4,000 again. Now, on Ethereum, you got 5,000 hanging out here. That was the highs of 2021, and this is an important area, but boy, we're blowing it all away. And you have highs out here. Okay, this bar from December, this is a weekly on Ethereum, closed at 4,068. That's the high close on a weekly basis. We're $10 above that right now, Ethereum. Ethereum's a little bit different. Cryptos, they trade 24 hours a day. The weekly, it just never stops, right? In crypto, that's your weekly. And yeah, on a monthly basis, though, how about that volume in July on Ethereum futures, right? You want to talk about price and volume, folks? There it is, baby. Right? Volume in May, slight pullback on a slight dip, and kaboom. You break out to the upside, and this is going to break the highs of last year on Ethereum right now. Ethereum up by almost 5%. Crude. Lower prices at crude. Now, I'll tell you, what's interesting here is, so you hit $62 this morning. Little volatility. We got news everywhere in this market right now, but we're dipping down from $70 in the last week. And yeah, if you can hold off on those gas pumps, folks, you need gas, give it a day or two. See if it comes down, because I tell you, I was filling up yesterday, and it was $3.15 in Florida. There's a lot of times gas down here has been $2.95, $2.92. Tampa's got a port, so we have low gas prices around Tampa as well, even you make it out into Lakeland. And I was actually surprised it was so high, though. Think about that, right? $2.99 gas at Sam's, where I go, Sam's, Walmart. But that translates to about $3.15 gas at most of the stations, which is pretty expensive compared to where we've been. But guess what? You have crude. The reason why I mention it is, yeah, I'm paying prices of the gas when crude was pushing 66, and it varies, folks. Okay, it doesn't quite translate to a barrel of crude versus what gasoline costs. But they are related, and you have crude approaching the lows at $63, man. We hit a 62 handle today, and yeah, $60 is the next spot. That's where this market has found a bottom in months past, and that looks like where we're heading again. Now, we jump to yields. You jump to the dollar. A little bit of lower price, higher yield, so a slight reversal of what we have going on from last Friday. But all things considered, we get the 10-year right now flirting with about 4.3%. All things considered, 4.3%. It's a low yield right now. And the odds of a Fed cut approaching 90+% when we're talking about the Federal Reserve when they meet in September. And so, yeah, pulling up the exact yield on the 10-year right now. We have the 10-year at 4.29. Okay, 4.29. Now, for some context here. Okay, this area of about 112.12, right? We made it to as high as 112.15 on this run. That correlates to a 10-year yield of about 4.2%. And that seems to be the barrier right now. But that barrier is not going to hold if we start going on a Fed cutting cycle. That more than likely is probably going to happen. Now, the data can change, of course. But, I mean, even when you take a look at swaps right now, okay, where the Fed funds futures are, 90% is what they're pricing in that the market's going to be cutting when it comes time for the September meeting. You go out to October, the market thinks it's a 60-40 chance that they cut twice by October, and one cut is the 40, and somehow you got a 4% chance that there's no cuts by then. Maybe you get a cut and maybe you get I don't know, a hike. Who knows? And then you go to December, and the market thinks we're going cut, cut, cut. Yeah, market thinks we're going cut, cut, cut right now. You go into January, and it stays there. Okay, so that's where the market is right now. The market's thinking we're getting 3 straight cuts. That's what's priced in. You're going to see pressure on yields. As in, you're going to see higher price, lower yield as that date approaches. And the dollar chopping around near 98 right now on a weekly. We reject that 100 price point, and we've just been chopping around at 98 since Wednesday. And yeah, we take a look at the weekly. Not quite clawing back the prior week, but nonetheless, pressure to the downside. Now, gold is its own animal today, folks. Don't get caught in the headlines, all right? Yeah, and there's your clarification at 145, okay? Comes out that gold is going to get tariffed. Okay, futures go haywire last night. The White House said it will clarify misinformation about gold bars facing tariffs. Misinformation coming from the CBP, the Customs and Border Protection, said earlier that gold bars are not excluded from tariff. Gold futures closed their record but have pulled back. The White House intends to issue an executive order in the near future clarifying misinformation about the tariffing of gold bars. And yeah, probably could have been handled a little bit better, right? I guess things get clarified. You know, you take a look at how Bloomberg puts it, pretty the exact same thing. Clarifies misinformation, and that's how they're calling it. But yeah, there was even speculation in the den last night. It's pretty tough when you can't quite know what's going on as things even get announced. But they're going to post an executive order in the near future to clarify that. It's going to issue a new policy clarifying that imports should not face tariffs, after the government stunt traders saying that they would be. And yeah, so nonetheless, gold pulls back, and as I was saying this morning, folks, okay, boy, if you told me the most deviant way for gold to make a high before you pull back, oof, it would be on some fake news from the government that somehow spikes it to an irrational high, and gold makes an all-time high on that news. We've backed off almost $80 from that level. We're coming back, folks.